Welcome everyone to the Kendall Report, where I share my 44 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In today's video, it's a special Friday final closing hour. We're going to just summarize the week and take a look around what's going on in the markets. Let's get into today's video. Okay, Daniel, you're always the first. You're good, man. Appreciate it. Yeah, we'll just hang out and chat for a few minutes while the room's filling up before we get into today's stream. Yeah, sorry about the delay. I've got way too much going on. Trying to keep everything flowing over here has been difficult lately. So we're looking at an interesting time as we just taking a look here, and I'll go through some charts and stuff here. Okay. Is it just not, it's good, but there's a slight echo. Okay, I don't know why that would happen. Yeah, just let me know if this gets better or not. Okay, if there's an issue with the sound, we'll work on that. Yeah, so we look at this week. It turns out that we had a much more positive week than I thought we were going to get originally. You know, we were looking at the database. Okay, so let me know. I don't want to get into talking if it's like really weird. Yeah, I don't know why it would be anything. Let me just check a couple settings here. Okay, while the room's setting up. I don't know why it would be doing anything, but let's take a look around. There should be nothing different than it was. Oh, okay, it's all good there. Okay, Hollywood, appreciate it. All right, well, let's just go ahead. I'm going to assume that we're going to get through this. But yeah, you know, and if you just go through, if you're on the Substack and look at what's been going on, you know, it looked like a couple of days ago we might soften, maybe get a little of a rejection. We got a bit of a rejection intraday today. We got up to an S3 on the S&P and then pulled back pretty good. But for the most part, you know, this is a positive week. We're looking at, I'm just getting some numbers here. From last Friday, I'm looking at the futures on a weekly, we were at, looks like 51.54, and here we are at 52.45. So a decent move for the week from the S&P viewpoint. And I told you, you know, the market was going to be dominated by the earnings, and this is really what's going on. And I went through a little bit of a rant. I wonder if I bumped the button here on the reverb or anything. So let me know if it gets any better here on anything, just in case here. That's really strange. Okay. Yeah, I don't know. I don't change any settings. I just show up, turn it on. So I apologize. I don't see anything different, so I'm just going to go on. Let me know if it's just like unbearable, okay? I always hate Windows has an update in the in the tray at the bottom. Whenever that happens, Streamlabs screws up and everything's wrong. Okay, so let's just go on. But yeah, so the market configuration, there's a view that I'm starting to get, like right now we're retracing up towards the highs, right? We're getting very close to an all-time new high. What's interesting, and I've been showing you on the Substack, that the chart I put out last night, there's this 1, 2, 3 pattern. I'll go through these in a minute as we start to get the room filled up. And you know, they're very accurate when they set up. We also had a market flow buy that came in, I believe it was about 2 weeks ago. Yeah, Yeah, maybe that's the case. It's kind of noisy sometimes where my office is during the day, so it's the worst. It's better late in the afternoon. But anyway, let's try to get into a flow here. Appreciate everybody showing up, but let's go over and just put a chart on here just so we can see what I'm talking about. So we're looking at the S&P. This is the weekly chart. And so we've got somewhat of a right shoulder setting up potential where we could stall right in here, not make a new high. We're very close, but what we're seeing on the daily charts and other areas, we're still seeing some building momentum. You folks know that the main thing that I look at a lot is the WaveTech Database. Let me bring that up real quick so we can just get into where we're at here. Let's just look at the daily right now. We're at 39% exactly, and that is just below that 42% level I talk about all the time. So we're right at the threshold. So what does 42% mean? 42% means if we get above that level, there's a material amount of data moving in a direction or otherwise showing that there's trends that it suggests that trend has enough traction to affect more and cause attraction to build. I have kind of a 40% rule that I use on a lot of stuff. Is folks think that you have to have 60 or 70% of maybe any kind of movement to have a material movement, but 40% is about the number that if you get to 40%, then that's enough to get whatever it is, whether it's markets or social or whatever. You get 40% of a population thinking one way, you've got a material amount. It doesn't mean it's a majority amount, but that material amount can affect the overall ongoing effects. And it's the same thing with this database. It's really just a statistical map of what's going on. And as I've told you with the database, it really is just the ability which to see trends, not stocks that are over its 200-day moving average or 50-day moving average, all that. It's not. What we're identifying is actually trending, not only trending environments, but we have a probability map, and we know that there's a certain amount of these stocks, and it's typically around between 61 and 67% of all the buy signals that we get will move in that direction, and oftentimes they will go into the map. So on this page here, I can go in and click on the R button. I'll just do this real quick. And what it does is it actually shows you where we are. We go over here to the model results overview, and it tells us how many days that we normally hold. This is on an index level, but just to show the stats, is telling us what the price is. We get over here to the trade profile, and it will show us how many typical days. So this particular index, I happen to pick something just brand new buy signal, but it's typically 33 days. And that's the beauty of WaveTech, is not only does it tell you when to buy or sell, it tells you what the probabilities are and what the normal returns are on that buy and sell. And you can really break down a lot of these stats. And I'm working on a project right now and you can, if you have WaveTech, if you're a WaveTech user right now, you can cut and paste a lot of this stuff, put it in the chat GPT, and probably use GPT-4 and ask some questions about the durations, just prompt it to tell you about volatility, ask it about what it sees, and it's amazing what kind of report you'll get out of there. I'm actually working on something that will give the ability for us to do auto reports out of the system, and yeah, there's some really cool stuff about to happen. That's part of what I've been working on today. So just know there's some really cool stuff. This platform is, I joke and I call it Craigslist for the markets. It's going to be a eventually revamped here and modernized to a large degree, but not only modernized, but actually bring in machine learning and other types of ability to report with GPT interface, and what we're going to be able to do is pretty amazing. And I feel like as we come into this year, there's a lot of things that you're going to need to have. And so, WaveTech's pretty basic. It's $97 a month. And you can go, if you're interested, it's www.kendallreport.com/WaveTech, and you can find out a little bit more on how to find out and to get started. And I am working on a course and some other things right now that's going to help you folks to not always just speculating, but actually managing your money. There's a difference between managing money in a pool of assets and speculating on indexes. But anyway, I digress. All of the stats that are in here are incredibly useful, and that's why I'm going back to the research, and we'll go back to the daily. And that's why I watch these numbers so much, because I know there's a combination. It's not just buy signals, it's the longevity. I know that the typical holding period is between 35 and 50 trading days, which is the better part of 3 months, is likely to happen. So that's why it's important. And when you come to this channel, and I'm always going on and on about this, because this is Bob's world that I've lived in for a long time. We've actually managed over $250 billion plus on this platform. And so when I talk about this stuff, it's really material, and getting up to this, we're at 39%. Long answer, folks, just trying to get into the flow here, is that when I get up to this 42% daily, that's just going to tell us that there's more likelihood, probabilities are going up, that the trend that we're seeing right now over the last, we'll say 8 days plus, is going to continue. And because, like I just said, these signals have about a 35 to 50 day spectrum that they'll unfold in. And if we get up over around 62, 68%, if that happens again, then we have a good chance of getting a reasonably robust trend. And that will basically confirm that there's so many stocks actually participating in the rally from a trending standpoint that it's going to continue on. So let's go back. Let me just get back over here to the week. This all plays in to the weekly chart, and today is Friday, so tonight we'll run our weekly models and we'll get an idea of what's going to happen from there. And so just know that this is why I go on about these things, because they are the material aspect. I see what I do for a very long time as completely different than a lot of folks. I'm obviously focused on my indicators and my environment, but that's what makes the uniqueness of the analysis. And this database keeps me pointed in the right direction. And so when it gets above 42, north is the right direction. We'll see a little bit more of a pattern here. Let me bring this daily up. Let's see if I can. I think I have the stats here. If I can bring this up real quick. Let me just light up something here. Yeah, so we'll put on. We'll put this on here, and I just want to bring this down. So these are the signals that have been coming out of the market flow that I've been talking about. So we got a signal over on April 3rd to go short, and then we got this buy signal. So I kind of came out of a right shoulder, but I want to show you this pattern, because this is important, especially if you're hanging out with me and you're using the indicators. This is going to be really useful from that standpoint. So I'll draw in a couple things that is important to see. And in fact, I'll see if I'll add some of the indicators in, but these green lines, these Fibonacci targets are coming from recognizing this 1-2 pattern. I call it a 1-2-3. So you have to recognize this, and then once we get the pattern in place, you start to see the calculations come in, and it automatically does this, so you don't have to guess. So the first arrow I put up here is where the sequence would be equal to 1 and 3 equal. And let me just clear this out. So the length, this right here, the length of 1, or the first wave up, then you get the corrective wave, cup and handle, right shoulder, whatever you want to call it. There's a whole lot of, depending on your vernacular, you get this right shoulder. Once we get that and it gets marked, the indicator that's built in here where these green lines are coming out are forecasting 3 things. They're forecasting that this first leg over here that I just pointed out, let me just put in a different color, but this first sequence up, we need to know the length of that, and then we need to know where the bottom is of 2, and then we can calculate these numbers that where the blue arrows are, and that's what this is doing. But this is a classic setup pattern that I've used forever and ever, and those of you who've been around the live room will know that I always talk about trading in threes, where you put increments of 3 different positions. You don't have to enter everything at the same spot, but like just for an example of this would be when you get this buy signal that came in right here, you could buy on that, and then as you came into this right shoulder, you could buy a couple more times, and then when the market starts to move toward the direction, we're still not at the first target. The first target is, let's see if I have it on screen. I don't. I'll bring it up in a minute, but I believe it's 5309. So that first target, you would actually let some go, and this works with option strategies as well. It might even be easier with some option strategies with calls where in the old market making days, we always tried to look at you want to eliminate risk in a position whenever you can. So that's why you trade an increment of 3s, and then when you get the increment of 3s, now at each one of these points, or there's going to be decisions to be made that are going to scale out of this position. One of my original mentors used to always preach about this. This goes way back into the 80s. He'd always say, by the time the market gets to where you think it's going, you should be out. Okay? Don't get greedy. Don't think that it's going to go more. Sometimes you can reevaluate things. But if you do the increments of 3, that last piece, so you can do when it hits that number hits that target, then you can actually take profits at that first target. You can be flexible, taking another tranche of your orders into the second level, whatever you see there. And then the third one, you can get a little greedy and raise the stop up so that you can't lose, and see how far it'll take you down the path. There's nothing wrong with that. But this kind of trade setup is classic. And this is a daily chart. These set up on 5 minute, 1 minute, any time increment, any time series you want, you can actually use this, and really this is all you have to do. If you just understand, I call it the ABC or 1, 2, 3, you only trade that pattern. You don't get into predicting and being a Tesla fanboy where you're going to hold it forever, or Bitcoin where you hold things forever. If you're going to be a trader and you're going to go in and do this stuff, this is the methodology that I basically perfected over decades. And how did I perfect it? By screwing it up a lot, right? So I always tell everybody I only made the same mistake like 55 times. It just happens to be a Fibonacci joke that I always made. And so what I would, the reason why I show you this, just hanging around this channel for me, or having the tools that I have in place, if you have the database and you've got the indicators, you can set these trades up and start to go through this. Now, like I said, we're working on some things to put a course together to actually be able to show the actual trade setups that are very intricate. But I'm giving you some freebies at the moment. But hang on, bear with me 1 second. Okay, I'm back. Sorry about that. But the reason why I go into these type of patterns is this is where the money's made, folks. You don't have to be. I'll look at the questions that you guys are asking here in just a minute. But this is like a really simple setup. Let's just, for fun, I have no idea if there's anything out there, but let's just. I'll probably have to, we'll see if this thing sets up well or not. This is a 5-minute graph. Yeah, here's another pattern. For the moment, let's take market flow out of here. And this is 5-minute on the futures. Don't even have the PPMs up there right now. And I'm going to set here on the fib ratio here. I'm going to bring up something here so you can see this. There's a couple things we can do which I think is helpful. Now, this is defaulted to strength of force, so those of you, there's quite a few of you I know that have the indicators, then you want to just kind of leave this set it. But if you click this show pivots, all of a sudden these arrows show up on the page. And when the arrows show up on the page, that shows you where the marked high-low is. So this is, like I said, it's a 5-minute graph. I'm not even looking at the PPMs at the moment. All I'm looking at is the formation, and I can even do one more thing here. We can add, and this, for me, these tools that I'm showing you right now are kind of learning the patterns. So you can go in and go to. You get the indicators. You can go in and put the pattern finder on here. And you'll see all of the patterns being marked out, and they're being drawn from point to point. And so when you see this is pretty choppy. It's okay. It's a 5-minute chart. We'll look at a couple others here for a minute because I'm kind of into. We don't have a lot of time together. I'll come at the end and we'll talk about setup for next week on the markets. But this pattern, this 1, 2, 3 pattern. So let me draw it in just so you can see it just a little bit. I was taking a look at the chat line here for a second, but let's just go in and draw something in. So this marked line here I'll make this fat and ugly so we can see it. But this is the line here. These dots are coming from this formation. So and we have already hit, if you notice, let's say we want to be buying into this right shoulder. So you're buying low, selling high. So you're not buying over here. You want to buy into this pattern. And typically, I'm going to back these out so we can see what's going on here. But typically, especially when you start to get down to this right shoulder here, and we'll bring in the PPMs, which will help you to identify this, but that right shoulder, you want to be buying down into this level, right around these moving averages that are down here. And then you're going to get the confirmation off of here. So you're anticipating that pattern to play out. So you've got this, it's coming down, and somewhere in here you start to do your 3 buys. And you've got your stop loss under here. Shouldn't go under that because it can't be a 1-2 if it takes out this low is critical. And then what you're seeing here is even some patterns here, but we got right to the target 1. So what should have happened is some action should have happened. You should have taken a partial profit at that level. If you got 3 on, even if they're micros, doesn't matter what they are, but you want to be able to have the flexibility because it teaches you how to respond to when things happen. And that's where most people make mistakes. Like, oh, I really believe it's going up here, I'm going to wait. And then the market does this, it takes away all the profits, and you end up stopping out with a loss, and you're just sitting there talking to yourself all the time, which is no fun. So, but these type of setups, I'm going to take this chart off, and I just want to look at and we're not even using the PPMs at the moment. We're just looking at pure charts. We're looking at patterns, looking at this setup. So let's move this over to an hourly and see if there's something there. Yeah, and there was a pretty good rejection trade here off of the hourly that came in. If you read the Substack last night, I was talking about getting up into R2, R3, and getting a rejection out of there, and pretty much spot on. I think it was almost an exact R3. We'll take a look. This is hourly, but on the daily. So this pattern here set up really, really good in this rejection that we got off of here. But this is kind of the bigger pattern. I just draw in what I'm talking about here, just so you folks can see this, and I'll look at some of your questions and see what's coming up here. So this pattern, we kind of get a little zigzag here, right? But that pattern there is the way I've got the algo set on the pattern finder at 4. You can fine tune all this stuff too. I wish I had about 2 hours, and I would maybe that's what I need to do. Yeah. So somebody's saying it pivots arrows are similar to Williams fractals. Yeah. I don't know what Larry's doing on that. Larry and I go way back. But anyway, these patterns here, but it's nice to know where these pivots are, and then you know where to play. Once you get a marked pivot, you get the arrow, then you know you can play off of those, and those come like 4 bars after, so you don't find out until it's over here. But you know on this bar here that the probabilities are pretty high that's a marked low in the pattern, and you're going to have an opportunity to absolutely hopefully make a swing like this. And this is a big swing, this 50 handle swing on the hourly chart on the S&P. So, and listen, this works on stocks, anything. It's not limited to index trading. And it's just chart is a chart. I used to be associated with a company once that you could take the symbols, you could remove the symbols so you could look at the chart, not know what it is, and make analysis without having a bias that it was your favorite stock or whatever. It was just kind of a mental exercise to do. So let me look at a couple questions you folks come while I'm doing this stuff. Yeah, just let me read a couple of these real quick. Yeah, the way you know how many, just I'll answer this question. The way you know how many pivots it will appear, it's this setting here. Let me double click on this. This 4 number that's how many bars. So if you want, you can lower this down and you can get more. And I would use both of these, the same pattern, and you'll see, you'll get smaller increments, so you can get marks for other patterns, so you can decide. There's, from a standpoint, if you want to get to a little longer, my two settings that I use a lot are 4 and 6. And you'll see the 4 and 6 mapped out the bigger patterns. So let's just take a look at where that is. Let me draw that in, because that's actually a good question there. So here's the marks. We got right here, and then this is the next one, and then we got a mark up here. So this was what I was showing you a minute ago. This was the big swing. When we have it set on 4, there was a marked pattern here and here, and then we had this lower pattern. But when we go to 6, then we caught the bigger swing, and now all of a sudden, this is like, I'm just guessing, 51.90, and this pattern over here, 52.47. I said it's like a 50 handle move that you caught there. And one of the other things that there's something else that happened here. If you've been around the channel, you should know, kind of at least heard this enough that it's starting to set in by now, is that one of the things that I talk about is we got right here, we got a RTX sell signal right here on this bar, which suggested 1 to 2 bars sideways. We got that, so this bar and this bar sideways, and then resumption to the upside. We got the mark top, mark low. This is like a really good pattern. I didn't look at this. This is all random. We're just doing this analysis together. You should know that pretty much very little is premeditated on this channel. I just do the analysis with you, so that way you can see exactly what's going on, what my thought process is. I try to share that. I think that's educational in nature, but also doing a lot of analysis at the same time. So, yeah, so just that pattern, it just kind of comes out. A lot of times I'm doing stuff and it just comes out like that, and that's a good thing. Let's go and let's bring up the PPMs now. And this is probably even more reviewing. So I'm going to go through the same pattern, so we'll just complete this thought. And we spent a fair amount of time doing this, but it's okay. You'll gain a lot from it. Oh boy, Eddie Yardini's on CNBC right now. My favorite, you guys know, he used to be our head economist once. I worked with Ed many years ago, decades ago in the 80s. So anyway, he wasn't any better then than he is now. I told you folks, we used to always just fade him. I worked on an institutional desk, and he was the ultimate fade. Anyway, let's set this back. What I want to do is do a replay, and let's watch this happen. I think this will be interesting, so you can see what a couple things. We're going to tie together not only the pattern and the pivots coming on, but we'll be we'll see what, if the algos were telling us anything, if there was any other elements coming out. And I tell you folks this all the time, the best way, and I put my entire suite of tools out there for you folks, so, and I try to teach this stuff. I am working on a new channel called WaveTech channel that is going to be just education. There's not going to be any analysis, but it'd be stuff like this that I'm going to put out. And I want to make sure we start supporting everything that we're doing really well, so you folks can benefit from them. But bottom line is we'll run this script, and I want to see, we'll start to tie things together. So the more parts of the tool, I have basically 10 things that I use. So if you're owner or you're thinking about owning the indicators, I have basically these 4 ppm. So it's really one thing, but it's 4 variations of that, because each one of the ppms track a moving average, and I'm looking at the underlying trends in multiple levels. And then I want the Fibonacci targets. I want to have some idea where these patterns are telling us they're going to go. And you can do all this stuff longhand, so to speak, but it is brutal, because you'll sit there while you're sitting there trying to figure out this next calculation. The market's doing what you thought it was going to do. So you want to have as much automated as you can. We did this original, most of the automation came originally in 84 through 87, and 1990 it was 1990, hooked up with, that's when I hooked up with TradeStation. It was Omega Research at the time, and we started building all these indicators that you guys have were originally built in TradeStation, and I was the very first solution provider for TradeStation. I worked with the Cruz brothers in launching that product. But the point of what we were doing was just trying to automate the best, or have things happening that as a trader you want to know, here it is, the pattern. And once you build a trust in it, then you can respond and trade accordingly. If you have to do too much thinking, especially intraday, but it's the same even at the end of the day, if you have to spend too much time, it wears you down. And actually, coming from the environment I'm telling you in 1992, in 1996 is when I built the portfolio manager, because now I just wanted to apply all these things and build portfolios on those bases. And then I built the allocation models, all kinds of things to run the money. But these trades were essential to being able to make these decisions. And the more, what I found, I used to have my sheets, I used to have the market grid back in the 90s when I was on the Pacific Options Exchange. I'd have my little cheat sheet on the markets that I was trading, so I knew, S1, S2, R1, R2, whatever, the whole market grid number. I've been using that since the 90s, and all it was to do is to give me points where I could trade off of, depending on what my bias was for the day, whether I was bullish or bearish, all those kind of things. I used to do something, I'm going to look into adding this in somewhere, as not only, and I try to do it on Substack, I'll mention where I think the support and resistance ranges are every day, but I'm working, I used to put out a probability higher or lower close, and that came from a combination of the market grid and the PPMs. But let's continue this example, because I'm pretty deep in here right now. And somebody, just real quick, sometimes when the PPM indicators aren't showing a projection, it's a trading view issue. You need to probably log out, log back in. It usually fixes it. Sometimes I find if it's doing that, change the symbol to another symbol and then put the symbol you're working at, and all of a sudden they work. So I think it's just a trading view. I think it's a cookie issue potentially on your computer. I see Key. Yeah, we'll finish this example, then we'll focus on the market's close. Okay, so this is worthwhile, especially those of you that are thinking about or have the indicators. If you're thinking about it, it's kendallreport.com/indicators. But the bottom line is, let's take a look and see how this unfolds here. And I've got it. Let me scale this back just a little. Now this should be fine. So what we want to see here, what we're watching for, is that marked low that's coming in. We know there's one coming somewhere. Oh, we missed it. Over here, the marked low, doggone it. It's going too fast, so let me rewind this. All right, let's try this again. I think it's the next bar. So we're going to get the low, and then it's going to be 4 bars after that. I think this is it right here. So we're going to get the marked low, but what I want you to see here is that the forecast for the PPM1 is showing higher prices coming into, like on, this is May 9th, around 11 o'clock. So it was forecasting them up. We're looking for, and this is set on setting of 6 for the pattern finder, and so we're looking for this setup here. And when this happens, yeah, you can see the forecast is still higher. Notice the WTRs, the forecast for the moving averages, are continuing higher, and we come right in. We see a turnover here. There's the marked bar. Let me see if I can stop this. Yeah, so we came right into we got the marked bar. This is that 50 handle move that I was looking at earlier, right here. And then it went sideways right into the 10 period moving average. If we look at the PPMs, they are at, I'm just looking at value at around 0.26, so they're in trend mode. And so you would expect the market to hold the 10 and move higher. But if you're just trading these patterns and you got that exit, and we also had, you can't see it in here because they're embedded, but there was a high-end Fibonacci target in there as well. Let me break that down. Yeah, there was a high-end Fibonacci target right at 5240. So that could have been, if you were using the 3-step method I was talking about and exiting, that would have been where you would have been putting out the balance of your position and be out with. If it went higher, it just went higher. One of the things that I will just close out on here is that if you are trading and you're looking at like swing trades off an hourly chart, which is one of my favorite trades, and I think we just had, we'll go and look at the most recent, let me just run the script all the way until it's real time, but I think there was just a hourly V signal that just came in after this big reversal. I'll let it run out. Let's see if we, yeah, I think, let me just make sure we're right real time here. Yeah, so this, yeah, we didn't really get one. I thought there was, but the pattern that we saw there was this that big pivot right at the top here. But all you really care about, and this is what I'm trying to emphasize here, if you can recognize this 1-2 here and you make that 3 trade, you're done. And literally, I'm a goal trader during the day, so if I have a dollar amount that I want to make relative to my equity, and it's an ongoing goal, so I try to limit the risk, but always trying to hit to the goal. And sometimes if you try to make the goal bigger, you give back the whole day. We've all done that. And so you're better off if you can get like a reasonable goal. I have a crazy goal of 1% per day. If I can do that, money multiplies like crazy, really, really fast. And all of a sudden your account gets really large. And but the point is that these patterns, all you need to do is capture these patterns and you're done. Go home, go do something else, so you don't have to sit there all day. So, all right, so let's go back over. I'm just going to come up on screen for a minute, see if I can bring some things up. I don't have TradeStation running right now, so Yeah, so let me just see if there's any questions here. Yeah, I'm sure Ed Force, you were asking about regional banks. This is, let's go weekly on this. We'll cover that real quick. Yeah, I mean, regionals look good. It goes all the way back to, the whole debacle that was played out as some major catastrophe about to happen. This pattern's pretty bullish. We've got potential for, we've got fib targets up here at 62 on this index, and interest rates are probably going to go down here in the near future. If you read this Substack, I was talking about, it's not big numbers, but we're probably going to hang around 440 to 460, a high end range. So I don't, on the 10-year anyway, the front end of the curve isn't going to move until the Fed does something, and I don't think they want to move. And I didn't see him around, but Dr. Baker and I had a conversation yesterday talking about a couple of things. Is that that if you're a bank, you're not buying any of these 30-year securities. There's too much risk in them, and those long maturities. I worked with banks for years on hedging and gap risk, and that's where Silicon Bank got in trouble, all that. And I think a lot of folks have woke up. I have no idea. I was one of the first teams in Chicago back in 1980 that we were cold calling banks, trying to get them to hedge their liability risk. Nobody was doing it then. In fact, the bankers that we talked to would say, "You don't understand. We're not going to trade futures and take on that kind of risk." And we're going, no, we're trying to get you out of risk and how to flatten this whole thing out. But I spent a lot of years doing that. I worked bond desks for many years and doing this, and I would those are so the banks don't take risk for the most part. They take everything is calculated risk and returns and spreads. That's how they make their living. That's why they have all kinds of fees on everything you do with them. They love fees, okay? They love banking fees. They love any fee on anything. And then they take a little risk on spreads. That's it. Everything, and that's the other thing. There's no real outright, that's why the duration is low in the banking system. So somebody asking, do you typically hold stocks over the weekend? Yeah, why not? I mean, hold stocks for 200 days. It's about the trend. It's not about the weekend. I don't have any. It depends also. Let me back off that. It depends also that why do you own the stock? Okay, so if from my viewpoint, I would have it in WaveTech. I believe you're a WaveTech user, but I would just have it in WaveTech and actually follow the bouncing ball. Stay with the trend, whatever it is, whether it's short term or intermediate. Either way, I would just go with that, and that would be the way I would do it. But hopefully, I answered a question on regional banks. This looks like a great chart. It looks like we could head up to like the 200 week moving average here. It's pretty decent. I'm popping back and forth answering questions here. So let's take a look. Yeah, look at this monthly chart on the regional banks. I mean, this thing is bottoming out. This goes to a couple things, and I could, it's like almost an hour in. We're almost at the close. Let's watch the close, and I'll come back and do a few things with you folks, because I couldn't do the full 2 hours today. So let's go ahead and let's watch the close. Are you serious? The sound was muted all this time? Oh boy, I'm sorry. Yeah, there's a special deal, Plug Recruiter, for getting the update. I don't know what happened to the sound. Let me know that it's okay now. Okay. Anyway, so we're just watching the 5-second chart coming in to close. This is a good close around this 52.50. That's 100 points almost above where we were last Friday. So markets did really well. I guess my idea. Okay, good. I appreciate that. Yeah, so yeah, we're getting some movement as we come in here. Well, we got this final minute we're watching right now. So we just got some selling coming in. But this overall is a good close for the week. Just some squaring up of the books, but we still had an upward bias. We traded up into the 60 handle today. I mean, you see we're bouncing around a little bit here, but the patterns that are unfolding here are still very positive. I suspect that our intermediate database will have little impact on anything, and I suspect that it'll just be kind of a grinding. I don't expect a big tranche of new buys to come in, but anything's possible. Yeah, there's some decent selling coming in. All of a sudden, we just went from 50 down to 44 here on the close. So some decent selling on the close here. But still, overall, good close here. Anything over 40, I think that's. We'll take a look as soon as we get the final close here, which we just got actually. So that was some selling in the close. Let's take a look at some of these other patterns here. Yeah, I did notice earlier, and it wasn't as dramatic, but I did see a turn up where it looked like we're going to get a bit of a rebound on the hourly, and we got not a clear V, but we got a slight uptick here, and we got the market to basically do an inside bar after that rejection handle there off of 51.33. That was all it took. This is a 1 month, so let's get to hourly. That's what I was looking for. Yeah, so yeah, we didn't really get I was looking for a potential of a last hour rally, and we didn't really get that. So, but the pattern we got here, we got this V sell, and if you can see where my cursor is, if I went back and ran the script, you'd see there was a V formation where it literally shows you that this bar is the final bar. So I need to actually this is one of my goals on setting up this WaveTech channel, is for education, to point out trades like this, maybe have trade series, and I'll be looking to you folks on those of you that have the indicators and use WaveTech, all that. It's going to be WaveTech PX, going to be all the indicators, everything's going to be over there. Well, that's good, Texas Dave. Soon I'll be Texas Bob. Hopefully, and I've actually got it structured out. There's a couple things to do. We're going to port and try to take some. Somebody's asking about when will the WaveTech channel start. I'll let you folks know how to get it, because the best thing that will happen is if I can get a bunch of you to subscribe to that channel, then the algos will treat us better and all that stuff, and we'll try to get that. I think that's going to be some really good content. I've been wanting to do it for a while. And in fact, I think I actually set the WaveTech channel up years ago. I'm just never have used it. And there's literally, I think, one video on it, so there's nothing there. Yeah, you know, I think somebody's asked about, do I have a young protege? I do have someone who's worked with me for years, but not in the learning mode from that standpoint. Oh, cool, Anil. Yeah, I wish there was a way when folks are in town. I used to live in Scottsdale for many years. I'm now up in the mountains, out of the heat for the moment, anyway. Just looking here. Yeah, so WaveTech channel should be soon. What we're going to do is port a bunch of videos that are relevant, that are educational in nature, including just stuff off of Portfolio Expert and things like that. Here's some things, some resources that's open to the public that I'll show you real quick. So if you go over to our Portfolio Expert website, and it's kind of stretched out here, but if you go over here, up at the top, you can go to support, and you can go to WaveTech training videos, and there's you can start a little course right there, and it will bring up some videos that show some basics of what's going on from the standpoint of the software. But there's little nuggets in there. There's also open to the public. There is Portfolio Expert University. There's ideas and concepts for portfolio management, and then there is a documentation of there's a lot of stuff here. This is an entire manual for our software. It's pretty extensive, but the only reason why you can go and peruse that stuff, it's open to the public, so you don't have to have a subscription or anything to get there. So that's something that you can do as well to learn. But like I said, when I get the WaveTech up, if I can at least get 1,000 of you folks out of 43,000 to sign up for WaveTech, then that'll get us into Augos, and we can monetize immediately and all that stuff. So we'll do that. The other thing that I am kicking around is, just so everyone knows it's hanging out, we got 160 hanging out. I am going to probably do some sort of seminar or something here very soon in the next couple of weeks. It would just be for folks that want, there'll probably be two. One will be on how to manage your own money and money management concepts and ideas, and it would be appropriate for anybody, whether you're individual or even if you're institutional advisor type. That will be there, and we'll be putting out some marketing things on that. And then there are also going to be some of the stuff I did today, like showing trade setups. There's probably 4 or 5 trading setups that if I taught to you would make a big difference in a lot of things that you would do and make you a bit more profitable. And it's really, listen, the art of trading, the art of being, I guess the best way to put it, the art of being good at this stuff is you just have to do it over and over again, and you have to develop procedures, and that's what I've done. And I first realized, matter of fact, one of my old associates that we built the PPMs together. We built a lot of the concepts, the probability maps, all that kind of stuff back in the mid '80s. And one of the things that Bill said to me, he goes, we got a really cool tools, but we don't have a trading plan. And it wasn't, we compared it, we were in the Bay Area, San Francisco Bay Area, early 1980s, Joe Montana days, if you're a football fan, and the 49ers were big. But we looked at Joe Walsh, and he had his little sheet of paper, had little colors on it. So they knew if it was 3rd and 5, what play to run. This had a better probability than this other thing, and it depends on what had been happening, the trends that were happening in the game. And it was pretty obvious that there were a lot of thought and a lot of probability thinking going on. So we kind of used that thought to start to build the basis for what's in the models right now. All of that stuff was developed around the mid-'80s. It really got more perfected in around 1990, 92, in that range. And that all came out of a couple things, is doing trades and trying to do our best to our best to put the trades together. But ultimately, we got to the point where we automated it and put it into logic, and that had to do with a lot of what happened in technology as it advanced. And now we're at next level of technology. I'm telling you, I've been doing some crazy cool stuff. It's not ready for the market yet, but crazy cool stuff with GPT-4. And I'm like, I've told you this before, I'm like a little kid with waiting for GPT-5. And one of my associates said, we had a planning meeting yesterday, and he said, I'm probably in the top 1% of 72-year-olds that understand and use AI at the level that I do. But I've been using AI, Portfolio Expert and WaveTech were AI, they were expert systems, and very similar to what's used in robotics for many, many years. If you go back, and neural nets and machine learning was pretty wonky for a lot of years, and now it's come into its own with new AI and powerful chips and the amount of things, evolution of technology. So I'm pretty excited about some of the things that I think we're going to be able to do, and I think we're going to be able to do some really amazing things. My goal is to help the average investor manage his money. It's fun speculating. What I basically talk about every day is indexes and technicals and all that, but it's a whole lot different game actually managing money, and the mentality has to change. And I did talk to one of our users the other day, and is not one of my goals is, for those of you that have WaveTech or are considering it, is that you're using it appropriately for the right assets in your portfolios and in your entire strategy for hopefully for growing your wealth and all that. I went off on a big rant the other day talking about how the books are cooked and everything we look at, and the government numbers aren't real. They're all fudged. They're seasonally adjusted. They make up whatever they do. And in the world we live in right now, you don't even know if the people that are doing the numbers are competent to do the numbers. You get the reference. But the point is that those numbers are what we trade off of, and those are the things that the masses of us that are investing actually use to make decisions or influence the sentiment of the markets. And so therefore, it could be all phony, all smoke and mirrors, but it's what we look at, and it's what other participants, so it causes cash flow in and out of the markets. So it's still relevant, and you can sit here and argue all day, and maybe you ultimately will come out right. It's like I got onto a thread with some Tesla people, and they're cultists. They just think they're cars and this is the answer to the world, and you're dumb if you don't see it. And I don't see it, and then I get called a boomer, which I am, and that I have a boomer mentality, and I don't. I think there's electric cars are good. I just happen to think hydrogen fuel, not cells, not electric, but hydrogen fuel engines will probably win out down the road. If I could turn the clock 20 years from now, those of you who will be around, maybe I will be, but you'll see the answer, whether that's right or wrong. But the bottom line is, it's, all of this stuff that I'm talking about is managing money, staying out of the noise, but the noise is part of the game, so we have to participate in it. So that's why I even talk about what's coming out next week. We got to look at earnings. This week earnings was massive. I think it was 20, I'm going off my memory, 22 or 2,400 companies reporting this week. Next week is, I already looked at the schedule just a bit ago. It's very light. It's, maybe 500-600, and then the following week gets less, and then we're done with this earnings season. So they pumped the market, and it looks like that pump will continue. We've got the Fed still on the lowering of QT, so we have that in the background actually working every day that they're not selling securities. So there's a lot of positive influence. And of course, the classic buybacks that are juicing the stocks as well. So there are people like even Buffett and Apple, a lot of these big companies have so much cash on hand, they're just going to buy back their stock, and that'll keep everything going in the direction it has been. Just look at last comment here. Says the Nifty 50 during the 60s. Yep. It's interesting. Kodak was one of the Nifty 50, and a whole bunch of portfolio managers got stuck with that stock for decades. It was crazy. So here's what and I'll go into one more little thing that's a good question to answer. Yeah, and somebody did study the viability of H2 fuels 40 years ago. Yeah, I think technology has changed a bit, especially Toyota is a leader, I think, in that space, and they make more cars than pretty much anyone. So back to Robinhood's question. My hypothesis, if you haven't seen it, you can sign up for free for this. You can do a free subscriber, or you can do a trial for the Substack, and it's kendallreport.com/newsletter, and you can get there. But if you get on the freebie, if you go back, I believe it was December 29th, look at my forecast for 2024. And if you look at that, one of the, just to set this up, is we had, a great year, 21, 22 was a bad year, 23 was a good year. Everybody thought because 22 was a bad year that 23 would be a bad year. It wasn't. So this time, everybody finally caught the pattern. So now they think 23 was good, so 24 has to be bad. So that's all the recession and all these people talking the market down. But meanwhile, what I've been seeing is the opposite, that 23 and 24 are going to be back-to-back good markets. But going to what's different, so we go to 60s, we go to the 1974, that was actually a horrific collapse in book value and other things that happened then. That was another inflationary combination of Nixon and Carter during those days, and Reagan came in, and Volcker. There were a lot of things happen, but I think we're entering into a new era. And the reason why I referenced that December 29th outlook for 2024 is the hypothesis is that the AI is going to multiply levels of productivity that have never been seen before. I think sitting here right now, when you see GPT-5 and beyond, the next iteration of AI that's coming out, not just from OpenAI but others, is going to actually be incredible, and what it's going to be able to do and make humans in general more productive. And I think productivity goes through the roof, GDP goes through the roof. We could see 8-10% GDP maybe starting next year in 2025 and 26 and 7. I did some estimates. I actually made some assumptions, put some charts in there that illustrate this scenario. There's also 2 videos on, I think they were done in January maybe, I'm pretty sure, that are on my YouTube channel that you can go watch. And the second one, I went into more of this scenario I'm talking about where GDP starts to expand. But then this is an argument I haven't put out there for a little while, is that, how's the best way to put this? Everybody's focused somewhat on the wrong number. Everybody's talking about debt, this, debt. If productivity does what I think, and GDP does what I believe productivity will cause to happen, then the debt to ratios start to just plummet. And they could get down as low as maybe 50% of GDP, and instead of everybody looking at if we're not going to be able to pay our debt by this number 2030, 2050, everybody looks out. Nobody knows what it looks like then, and I don't either. But what I am telling you is that I believe this new era that we're entering from an economic viewpoint is bigger than the cotton gin and locomotives and all that stuff that came out of really the first industrial revolution. And I go through the first, second, third. This is probably the fourth, and this is the biggest thing, in my opinion, that has ever happened, because it's not just giving people the ability to have skills they didn't have before, but it's also accelerating things. And I know Cloudflare, I watched Bloomberg a while back, and I talk about this in the video that I did, is Cloudflare actually showed where they had a job that used to take 8 hours for them to do, and they narrowed an 8-hour job using AI down to 10 minutes. And if you look at I think the last 2 earnings reports on that company, you'll see those results. You'll see that productivity. You'll see those type of things starting to happen. So I think that will be the next. This is the next thing. It's already here, and a lot of folks are, calling it a bubble and all that. And NVIDIA's building chips this big, not this big, not trying to make them smaller, but bigger and more powerful, like super chips and $40,000 chips. Maybe it's a way for them to crank up some money on their balance sheet. But my guess is there's going to have to be performance there for them to have to be able to get those kind of money. And there's going to be other players. I can drive down the road about 30 minutes and I'll hit the TSM new factory they're building here in Arizona. And it's massive. I mean, they've been working on this thing for at least maybe 2 years plus, and it's not done yet. I think it finishes in 26. But all of this stuff that I'm talking about here is not a fantasy, but it's a reality, and it's already starting to show up in some productivity numbers. And even Powell last time in his speech mentioned the possibilities of that they're watching productivity very closely, because if they get confirmation what I'm saying, what I believe is going to happen is actually happening, that makes their job real easy, because all the GDP to debt and the debt issues become non-existent. And I'm just going to stay on this rant for a minute, because think about everything. I'm just thinking about something else that was told to us. Remember when they basically shut down the government and had to replenish all the treasury, and you were told that there was not going to be enough money, that the treasury wasn't going to be able to raise the money. And meanwhile, every auction since that moment that you were told that wouldn't happen, what happened? There were 3-to-1 ratios on every auction and coverage. It's 2.7, 2.5 plus, no trail, heavy bidding for every auction, these massive treasury auctions. And you look at the pure numbers and you think, oh man, they're never going to be able to do that. Well, the reality is that was no problem. And there's lots of money on the planet. and to do this stuff. So just be careful buying into some of that stuff. So let's see what, okay, I got that out. That was good. I needed to get that out. Yeah, we do have a Discord, by the way. If you buy the indicators, you get into the Discord too. Yeah, I'm just looking at what Robinhood's saying. Since 2016, I used AI to manage digital media. I'm a believer. Yeah, I've been using AI since roughly 1996. Even though the AI was expert systems, I started building decision trees and knowledge trees back in way back, and it changed my entire trajectory of my career. By doing and having those tools there, and even though I always joke that WaveTech is a pretty clunky tool because it was built in 2000, and it's Craigslist for markets. The engine that runs that thing is just solid and as good as the day we built it, and the logic that's driving those decisions is really good, even with a lot of shifts that have occurred in the markets. It's actually made, in some cases, it's made the models even more effective because they're very good at picking up ongoing trends and trend extensions. And we have some symbols in our database, that they'll hold for 400, 500 days, and that's all on an intermediate model. In Portfolio Expert, we actually have monthly models. We have a much larger model, which we've seen symbols hold for 6 and 7 years. So, it just depends on that modeling. And, my goal here is to try to get all this stuff out to you folks. But, everything that makes the world turn is, just this environment that I have. I'm very grateful. We still have like 140 people hanging out at almost 4:30 in the afternoon Eastern, so I appreciate it. So anyway, make sure you hit the like button. I'm gonna shut her down here, but I really appreciate it. Sorry I was a little late today. Couldn't get some things cleaned up, and I got to go back to my other job as soon as I get done here. But I'm really looking good. Key, I tell you, there is a special deal. If you let us know, we'll send you a special code. The thing with the new indicators is the algos and the predictive nature, and the WTARs, which are the predictive SMAs. They're worth the upgrade. One of the other things that I would just comment on, the beauty of having WaveTech, I just talked to a user the other day. They've got the indicators and WaveTech. Is when you go to WaveTech, it gives you the buys and sells. So let's say you have a new buy today, whether it's weekly or let's just say it's a daily buy. You can go in, bring that same symbol up, bring it up with the indicators, put the PPM 1, 2, and 3 on there, put the moving averages, and you can see the exact setup that over 600 rules, and you can see the triggers on what sets that up, and you can start to learn how to use the PPMs just off of having that extra tool. And like I said, it's very, very powerful. So I was telling this individual the other day is, hey, you have WaveTech. You know when all the, when the exits come, the sell signals come, all of this stuff. And you can determine from that with the algos and everything. I mean, those two tools together, the indicators are a one-time purchase. The WaveTech is a little more intensive because we have to maintain the servers and all that stuff. The the one-time payment on TradingView is good because we don't have to maintain the servers. We don't have, once we put the logic out there, it's just there. And if you buy them, you get them instantly. It's automated, so we automatically put them into your handle that you have for TradingView. But on WaveTech, we've got maintenance. We got to buy data. There's a lot of expenses associated with that, and that's why that's a subscription SaaS product because of that. But we're looking at trying to package some things to make it, because for me, two things I can do. Not only can I get there's a couple things in WaveTech that will tell you, okay, it's got to buy. There's a trade profile. It gives you what the typical holding period is, how much it returns, what the risk average losing trade, gives you a whole probability map. But then if you take the indicators, you put WTARs, you put them on a weekly basis, you can now see the Fibonacci projections, you can see the WTAR, you can see where the flow is, like I was showing you on the hourly charts earlier. You've got all of that. And once you have all of those tools together, I joke, it's like having tomorrow's Wall Street, because you can start to see, you can visualize where the algos are telling you where the market's likely to go, and then you just put all the metrics together. You can look at the individual trade symbol, and it really builds a lot of confidence, because one of the not only does WaveTech tell you when to buy and sell, it also tells you how much. It's a portfolio management process. So if you're using it and you're just using it to buy sells, that's fine. But if you start to build portfolios and allocate your portfolios out accordingly, what it tells you, like it'll tell you put in 5.235% of your money into that symbol, and it organizes, it tells you how much cash to have to protect you, all of that. If you use it as designed, it's really good for your core money, and it's going to build that money over time, and it's going to stair step it up. And then for me, that's the best way. So one of the things I plan with the WaveTech channel and some things I want to do is I want folks to have that tool, because I think it's going to be really, really important as we go forward to get all of this stuff in alignment, so that there's some continuity of thought, so you get into money management versus speculating. I'm done. You guys have a great day. Yeah, and just real quick, I just saw Henry. Henry's right. This is what my suggestion is get, they used to have, I think, they call it Pro, now I think they call it something else, Plus or something like that. But if you get the TradingView, and then what you do is you just get the month to month right now, and then you wait till Black Friday, as he just suggested, and they give you like 70% off for the next year. So every year you just sign up on their Black Friday deal. That's the way to save money. You pay a little bit more in the interim. I get it, it's May. It's like 6 months out almost, but it's cheaper to do that than to roll over at the premium, the higher rate. So it normalizes under 2 years. So that's something else to look at. Yeah, I mean, that's the only way to do it, is to re-up on that rotation. And as far as I know, they'll keep doing it, and it's a super discount. I think it's like 70%. Well, Key, I'll tell you what. Contact me, info at Kendall Report. Let's talk. Yeah, just send your credentials. I'll give you a call. Yeah, here goes FF with Peter Zion again. Yeah, you have to realize that even if the population does decrease, if you have AI, it'll be like multiplying people, see? So even if you reduced it, it'll work out. Yeah, I'm not sure what you're talking about there, Bo. What do you mean as far as Yeah, there you go. Somebody's City Life, like if you do the competition, oh, that's interesting. Yeah, I saw that the other day. They give you a month free on TradingView. Yeah, yeah. Listen, there's a lot of hacks out there. What we want to do is our real goal is to rebuild the platform all in one. I don't know if I'll go to the point where I don't really want to compete with TradingView. It's a pretty amazing platform. There's no way I could ever build that database. Like right now we have 15,000 symbols. I brag about that. TradingView has every symbol at every exchange and every place on the planet. It's an insane environment, and it works pretty good. I've really acclimated fairly well to using it. I still use TradeStation for things, but I think it's pretty good. Yeah. Oh, okay. I see what you're saying, Bo. Yeah, you can use more. So on Black Friday, you can buy, it sounds like multiple years if you want. And you can really save money if you're committed to being on the platform. And I suspect the platform, our goal also is to get to the point where our models, our WaveTech and all that, where there's automated trading that you can just export right into a custodian, and you just click a button. And my ultimate goal is to have it 100% automated, where you build a portfolio and we have all these reports and we tell you anything that's going on. What I've already figured out is that with AI, with ChatGPT, there's a lot of reports that I can generate that are helpful if you're managing a portfolio. And then ultimately we just have it build the orders to go into multiple formats, whether it's the Charles Schwabs of the world or Robinhood. I don't know that Robinhood has any input, but anybody that has the ability, interactive brokers, there's a bunch of them out there. I'm not sure about, I think Webull might have something, but the whole platform that we want is to be able to automate investing so you don't get in the way. One of the things I talked about when I was going through the trade example, I'm trying to get out of here, but and the trade example just a little bit ago was, you and I getting our heads in the game and not doing the trades or getting out early or doing all this subjective type activity. And that's why you really want a very structured decision process. And WaveTech, Portfolio Expert, those are expert trees. So if you go on and just do expert models, AI, you'll see there's something called an inference engine, which is the knowledge that guides and looks for there's a certain set of exact criteria that has to be met, and then it will buy or sell, and that's what WaveTech operates on. So it has an inference engine, there's a knowledge tree, and all of that stuff that we built. This type of technology and thought has been around for a very, very long time. I literally built those first models like that I believe we probably started the logic in the mid 80s, but in the early 90s there was software and things that we could start to build these inference trees and start to build us into to make these decisions, and they still work really, really well. And it's not, yeah, so anyway, I got to get out of this loop, but I appreciate yeah, so their Texas Dave's answered it. In 3 years, you can parlay this thing. That's the way to do it, and you get it really cheap. And then, like I said, the indicators, if you get those, kendallreport.com/indicators, you get those, and you've got them forever. And as long as TradingView's around, I think there are over 50 million users. I don't think anyone's bigger than them. And and by the way, those of you that diehards, only the Mad Dogs and Englishmen are hanging around right now, is we are working on trying to get the WaveTech signals that will work. We're close. I've got some validation to do. So a little ways out, but not very far, that will actually do the buys and sells that's in WaveTech as well. And we're not going to, because there is some maintenance on that, those will probably be more of a subscription model versus a one-time purchase, but they will be available at some stage. Anyway, I'm done. It's the weekend. I've got a bottle of red wine ready for tonight, so I'm gonna check out here, and appreciate everybody coming. I almost got about an hour and 30 in, so not quite 2 hours. So great hanging out with everybody and just chatting. I will talk to you soon. Have a great weekend.
This is how AI optimizes my schedule. This meeting got canceled. Hooray! We didn't really want to go.
Hey everybody, Peter Zion coming to you from Colorado, and today we're going to talk about the Federal Reserve and monetary policy. Specifically,
FF, you're killing me with Peter. Old man with a ponytail. But I don't even know how to pronounce his name. Yeah, nobody wants those things. Thanks, FF. Appreciate it, man. Hey, Keith, send an email to info@Kendall Report. Let us know if you bought the indicators. Look forward to hearing from you.